Let me introduce the ultimate investing dream team, Charlie Munger and Warren Buffett, who've amassed their fortunes even during economic downturns. Get ready to dive into the realms of value investing, entrepreneurship, and side hustles as we reveal the strategies that have kept these financial titans thriving in times of recession. So buckle up and grab your sunglasses because your financial future is about to get a whole lot brighter with Munger and Buffett as your guides. Before we start, you need to understand the basics. What is a recession? Have you ever heard of the R word? No, not the word you might be thinking of, but the one that strikes fear into the hearts of investors everywhere: recession. Now, I know what you're thinking. Oh great, another boring economics lesson. But don't worry, I promise to make this as fun and entertaining as possible. So, what exactly is a recession? Well, simply put, it's when the economy takes a bit of a nap. You know, like that post-lunch lull you get at work, but on a much bigger scale. It's a period of time when businesses produce less, people spend less money, and everything just seems to slow down. Now, let's take a trip down memory lane to the Great Recession of 2008. This was like the mother of all naps, an economic siesta that lasted for years. It all started with the collapse of the U.S. housing market, and things just snowballed from there. Companies began producing less, people lost their jobs, and it was like the whole world was on standby. But don't worry, there's a light at the end of the tunnel. Just like how you can wake yourself up from a nap with a good cup of coffee or a brisk walk, economics can bounce back too. It may take time, but eventually businesses will start producing more, people will start spending more money, and the economy will begin humming again. So what can you do to protect yourself during a recession? Well, it's simple. Follow the advice of the Oracle of Omaha himself, Warren Buffett. Keep a long-term outlook, invest quickly, and focus on quality businesses. Invest in solid stocks from healthy companies and hold on to them for the long haul. Remember, recessions might be like naps, but they can be a bit of a nightmare for investors. But if you're prepared and know how to navigate the stormy waters, you'll come out on the other side stronger than ever before. So grab your coffee, get comfy, and let's weather this storm together. There are several money-making myths during a recession that Charlie Munger and Warren Buffett have proven wrong over the years, and here are just a few examples. Myth number 1. The stock market always goes down during a recession, so it's best to avoid it. Reality. While it's true that the stock market can experience significant dips during a recession, it's not always the case. In fact, some of the best investment opportunities can arise during a downturn. Charlie Munger and Warren Buffett are known for their value investing strategy, which involves identifying undervalued companies and buying their stocks when they're trading at a discount. They've made some of their most significant investments during economic downturns and profited greatly. Myth number 2. It's impossible to make money during a recession. Reality. While a recession can be a challenging time financially, it's possible to make money. Charlie Munger and Warren Buffett have both proven this throughout their careers. A recession can actually create opportunities for those who are willing to look for them. For example, when businesses are struggling, they may be more open to negotiating lower prices for goods and services. This can be a great opportunity for entrepreneurs to start new businesses or negotiate better deals for their existing ones. Myth number 3. The best way to survive a recession is to cut back on expenses. Reality. Although it's always a good idea to keep an eye on your spending, making drastic cuts can end up hurting your money over time. Instead of only reducing spending, Charlie Munger and Warren Buffett think it's crucial to concentrate on boosting your revenue. This could entail taking on another job, creating a side business, or investing in a new venture. By increasing your income, you'll be able to weather the storm of a recession and come out stronger on the other side. Overall, Charlie Munger and Warren Buffett's approach to making money during a recession is grounded in reality and practicality. By avoiding some common myths and focusing on value investing, identifying opportunities, and increasing income, they've been able to achieve incredible success over the years. Warren Buffett and his lessons during the recession. In the realm of finance, Warren Buffett is well known for his singular investment philosophies and unmatched record of success. Berkshire Hathaway, a worldwide conglomerate holding firm that has developed into one of the biggest and most successful businesses in the world, is led by Buffett as chairman and CEO. Buffett is renowned for his investment counsel, particularly during recessions when the economy is in a slump. His approach is based on his own experiences navigating market downturns and his belief in the value of investing in strong companies with solid fundamentals. One of Buffett's key pieces of advice for investors during a recession is to keep a long-term outlook. It can be easy to get caught up in the panic and fear that often accompany market downturns, but Buffett emphasizes that even the worst recessions are temporary. For example, during the Great Recession, the bear market lasted just under 1.5 years. While those years were undoubtedly difficult for investors, those who rode out the storms were rewarded with record-breaking bull markets afterwards. Back in 2008, Warren Buffett wrote an opinion article for the New York Times where he highlighted the importance of having a long-term perspective. "My purchasing is governed by a straightforward rule: be frightened when others are greedy. Be greedy when others are fearful." And without a doubt, anxiety has become pervasive, engulfing even seasoned investors. But worries about the numerous sound enterprises around the country's future profitability are absurd. As always, these companies will see blips in their earnings. In contrast, the majority of large corporations will break current profit records in 5, 10, and 20 years. Buffett's advice is to focus on quality businesses and invest in them with a long-term perspective. This means looking beyond the immediate downturn and focusing on companies that have strong fundamentals and a proven track record of success. Don't put off making an investment for too long, according to Buffett. Despite the fact that investing during a recession may seem paradoxical, history has proven that this may sometimes be one of the finest times to do so. Economic downturns cause stock prices to fall across the board, making it a great time to stock up on high-quality stocks at a significant discount. It may be tempting to put off investing until the market shows some indications of improvement, but if you go that approach, you risk missing out on substantial profits. As Buffett stated in the Times article, "I don't have the foggiest clue if stocks will rise or fall in value in a month or a year. However, it is more likely that the market will rise significantly before either mood or the economy improves. So, spring will be over if you wait for the robins." In other words, the stock market can be unpredictable, and nobody knows exactly when a bear market will bottom out. The best thing you can do then is invest consistently throughout a downturn to take advantage of the upswing whenever it arrives. Buffett accentuates the significance of concentrating on high-caliber businesses during an economic recession. The key to ensuring your investments survive a recession is to buy strong stocks, and the strongest stocks come from the healthiest companies. During a downturn, many stocks will see their prices fall. But if a company has solid underlying business fundamentals, like a competent leadership team and solid financials, it's far more likely to rebound when the market recovers. In Berkshire Hathaway's 2021 letter to shareholders, Buffett explained that he and business partner Charlie Munger own stocks based upon our expectations about their long-term business performance and not because we view them as vehicles for timely market moves. This point is crucial, he continued. Charlie and I are not stock pickers, we are business pickers. By following these simple yet effective tips from Warren Buffett, you can help protect your money during a recession and come out on top in the long run. Remember to keep a long-term outlook, invest consistently, and focus on quality businesses, and you'll be well prepared for whatever the future holds. Charlie Munger and his lessons during the recession. Charlie Munger is widely regarded as one of the best investors in the world. He serves as vice chairman of Berkshire Hathaway, the illustrious holding firm headed by Warren Buffett, and over the years has been instrumental in expanding the company's portfolio of prosperous companies. Munger is renowned for his in-depth knowledge of business principles, his aptitude for identifying high-quality businesses, and his ability to make wise investment choices in uncertain economic times. What guidance does Munger offer investors in order to navigate a recession? Munger firmly believes that while making investments, a margin of safety is essential. This comprises buying stocks that are now trading at a significant discount to their real value in order to protect against downside risk. As investors become more cautious and risk-averse during a recession, many stocks will see price drops. Investors who are prepared to do their research and choose the businesses that are most likely to weather the storm and emerge stronger on the other side may find chances as a result. Munger is a strong proponent of making investments in high-quality companies that have significant competitive advantages. These businesses often have steady earnings power and are resilient to temporary setbacks. Munger was positive on a number of significant banks during the 2008 financial crisis, including Wells Fargo and U.S. Bank Corp. He thought that these banks were ideally placed to withstand the storm and would come out stronger. He was correct, and both equities experienced significant price increases in the years following the crisis. Investors should exercise patience and refrain from trying to time the market, according to Munger. While trying to buy equities at the bottom of a recession and sell them at the peak of a bull market may be alluring, doing so successfully is a very challenging plan. Munger advises investors to put their attention on acquiring top-notch businesses at fair prices and keeping them for the long run. In fact, Munger is famous for his buy-and-hold strategy, which involves buying a select group of high-quality companies and holding on to them for years, if not decades. He believes that this is the best way to build wealth over the long term and avoid the pitfalls of short-term thinking and market timing. In addition to his focus on high-quality businesses and a long-term investment horizon, Munger is also a big believer in diversification. You can reduce your risk of any one firm or industry underperforming by diversifying your investments over a number of different businesses and areas. If you're optimistic on the IT sector but concerned about a possible slowdown, for instance, you might invest in a variety of tech firms as well as businesses in the healthcare, consumer goods, and finance sectors. In this approach, your portfolio won't lose everything if the IT sector does undergo a downturn. Finally, Munger thinks it's critical to maintain discipline and reason during unpredictable economic times. It's easy to make hasty investment judgments while you're experiencing the dread and panic of a recession. But Munger advises investors to remain calm, do their research, and stick to their investment plan. For good reason, Charlie Munger is regarded as one of the greatest investors in the world. He has amassed a remarkable track record of success thanks to his concentration on high-quality enterprises, a long-term investment vision, diversity, and reasonable thinking. Investors can improve their prospects of not only surviving a recession, but also prospering in the years that follow by heeding his recommendations. There is this question that might arise in your mind. Were Munger and Buffett just lucky to make money during the recession? Even if luck can play a part in anyone's success, it's not entirely accurate to say that Charlie Munger and Warren Buffett were fortunate to succeed amid a recession. Their success was a result of the mix of their investment philosophy, knowledge, experience, and just a little bit of timing. Munger and Buffett are recognized for their long-term thinking when it comes to investing. They focus on making long-term investments in and holding on to inexpensive companies with strong fundamentals. They were able to withstand economic downturns and even capture business opportunities that they brought about thanks to this method. Additionally, Munger and Buffett are both voracious readers who have spent their entire lives learning about businesses and investing. They have a deep understanding of how the economy works and have honed their skills over decades of practice. This knowledge and experience allowed them to make informed decisions during recessions and avoid panicking when the market was down. Timing also played a role in Munger and Buffett's success during recessions. They were able to take advantage of opportunities that arose during market downturns by buying stocks at a discount. However, timing alone is not enough to generate long-term success. Munger and Buffett were able to identify undervalued companies and hold on to them for years, allowing them to benefit from the compounding effect of their investments. So, 101 community, whether you're looking to invest in undervalued companies or start a side hustle, these two legends have got you covered. Just remember to stay calm, do your research, and always be on the lookout for opportunities. Who knows, you might just come out of this recession with a little extra cash in your pocket. Thank you for watching, and if you found this video helpful, please like and subscribe for more content on achieving financial freedom. Also, don't forget to have a look at the links in the video description. At our channel, it's our mission to provide financial education to everyone, regardless of their background or current financial situation. So, make sure to watch our video which is appearing on the screen right now. We hope to see you there.